underlying inflationary pressures are proving more persistent than we expected. Higher interest rates are needed to slow the growth of demand in the economy and relieve price pressures.
Here we go again. Another rate increase from the Bank of Canada is expected to take a big bite out of budgets. Good evening. The governor of the country's central bank called it a difficult decision. Today, the Bank of Canada raised its key interest rate a quarter point to 5%, saying economic growth has been stronger than expected with more demand. And the impact of this rate jump will stretch beyond homeowners with mortgages. As Manisa Danabalan tells us, concerns for small businesses are also growing.
The interest rate hike means people with loans and mortgages will be paying more, and that could have a big impact on small business owners.
You have 2/3 of businesses that are under variable rates for one loan or all of their loans that they're using for their business. What that means for them basically is that whenever the bank hike rates, they immediately feel the effect.
For businesses who are getting hit by interest rates and inflation, it's getting hard to pay the bills.
I'm only paying interest at the moment, again, because paying back the capital is going to be even harder, just because the interest payments are so high.
Marnie Mycroft says she launched her Pickwick Books business in Waterdown just this past spring, and she says the cost of her loan has increased by hundreds of dollars since then. As a used bookstore, she doesn't have a large profit margin, so she hasn't been able to grow the business as much as she wanted to, like launching a website.
The more money that's going towards debt repayment, the less you have to put into new fixtures. Even just painting the windows becomes an added expense that you might not be able to afford.
One of her concerns, like some other businesses, is cutting back staff if rates go up again. The Canadian Federation of Independent Business adds that there's a gradual rise in the number of business owners who are concerned about their future.
We calculated, for example, for a farm business with a $500,000 loan, which is typical for a typical farm business in Canada. That means that they pay $20,000 more in annual interest fees on their loan than if rate had stayed at the level they were last year.
Small businesses are also concerned about inflation. During the announcement today, the Bank of Canada added that it'll take longer than they anticipated to get inflation to that 2% target.
CPI inflation is forecast to remain about 3% for the next year before declining gradually to the 2% target in the middle of 2025. This is about 6 months later than we expected in April.
The central bank didn't say whether there will be another hike later this year. The next rate announcement will be in September. Manisa Danabalan, CHCH News, Hamilton.